why do life insurance agents often have a bad reputation, or the industry when it comes to any type of cash value life insurance, whole life, universal, whatever? A lot of times a bad reputation exists, and sometimes it's individuals in other industries and insurance agents, they fight with each other. Sometimes it's a dissatisfied consumer. Could be a number of reasons, but as a whole, a lot of times you'll see the negativity outweighs the positivity. Let's go through some reasons why. And here we go. So when I take out a cash value life insurance policy, the first thing that could result, right, the end result be a bad reputation for an agent, which would also, this is going to lead to a dissatisfied consumer, is poor performance, meaning poor policy performance. We project one thing via an illustration, and illustrations always change. They never match exactly what they say they're going to do. Could be higher or lower, but you'll see this to be the case in almost every scenario with universal life. When we look at the actual results, we've never seen one policy deliver attractive returns. That's been a case where they frequently under-deliver. And then poorly designed whole life will do the same thing. If we design a policy with a high insurance expense and nothing going into PUAs, you're going to see the same thing. Very low yields, takes a long time to break even to get your money back. It's not attractive. Now, the other reason, and I've seen this firsthand, is poor design. So I'll share a story to validate this point. When I was new in the industry, I was about 23 years old, getting into the sales side. This is before I started to transition into designing policies for individuals and corporations. I was at an office where the owner of this office and another agent had a prospect come in. They used Nelson Nash's book, Becoming Your Own Banker, as the marketing tool. The prospect read the book, was interested, walked into the office and threw it on the table, said, I want to put $100,000 a year into this policy. I'm 23, I hear the story, I'm like, wow, that's cool. Like, why is he putting that much into life insurance? Because I was new, I didn't know a whole lot. So he's putting $100,000 a year in. And remember, he read the book. And that book models high cash value, right? We can use the policy for the concept, and it touches on how to design policies properly as well. Now, we talk about policy design all the time. When I set up a policy, if I'm going to put $1 in, where can my money go? Towards the insurance premium. That buys me death benefit first, and then eventually builds cash, usually beginning the third year. And then the PUA rider, which if I deposit funds, they show up in cash value for the most part, and then I get some death benefit as well. But when we design policies, just like what we do when we work with a corporation or a bank, they are interested in how to inflate their balance sheets as much as possible to maximize the cash value, the monetary value, money they can use today, in the near future, and long term, but the cash value is what the policyholder has access to. So, back to the story. The individual read the book by Nash. The guy was a physician, wanted to start with $100K a year. Money can go where? Towards premium or cash. These agents, and this is going to validate why a bad reputation exists, had that full $100,000 go towards the premium piece of the policy, the base premium. And the verbiage they used to sell him on this was, well, first you need to capitalize the policy to make it work for the banking concept. Now, if we look at this point, if I put that much into pure premium, no term rider attached, at his age, his MEC limit may have been $180,000, so he's got some room for PUAs. The thing was, when he had more money to pay in, the agents recommended he open up another policy with, guess what? Pure premium. So it was a case where the marketing initiative was used with a great concept, something that works, people are attracted to it because it works, But then what was ultimately sold was a different setup. It was 100% premium. It was a life insurance policy, and it's going to take the guy 12 years to break even. Takes a long time. So that will certainly result in a bad reputation. And what it is if I'm that consumer, I buy a policy, and if, or I should say, when I find out that it was set up poorly, really just for a high commission, because that's what happened there. He was interested in the infinite banking concept, and he was sold a basic life insurance policy. When he eventually finds out what's going to happen, he's going to be upset. That's where buyer's remorse comes in. If I would have known I could have done it differently, I would have done so, but I wasn't taught when I first opened the policy. Now he's got to restart. Maybe he can salvage some of it, but he does lose time. So important to be aware of that, or really, this is what can cause a bad reputation in the industry. So really, if I'm a consumer and I'm interested, I'm doing my homework, I'm digging into the concept, and I want to take out a cash value life insurance policy, I want to do my research. Right? We always talk about the 4 major mutual companies: Mass, Guardian, New York Life, Northwestern Mutual. And really the only reason we're so big on them is when we look at actual results. Right? So we've got poor performance up here. When we look at actual cash value performance over time, we've seen those 4 consistently deliver among the highest cash values. That's why I'm a fan of them. Not to say other companies are bad, because they're not. I just haven't seen cash values on par with the big 4. And then you've got policy design. When you look at how corporations design cash value life insurance policies, and you see corporations and wealthy individuals have their cash value holdings positioned as their number 1 asset on their balance sheet, a lot of times second is real estate, we see that and we think, okay, why do the people with the money have so much money here in cash value life insurance? There has to be a reason. There is. If it's properly designed, positioned with a quality company, we see it produce safe, liquid, tax-free area. I can position money. I can tax-free if I do everything right. Can design it to be flexible. All of that good stuff. So I want to make sure the policy is designed. How do I, as an individual, mimic what the wealthy do, mimic what big corporations do? And really, that's why we spend so much time on the policy design. Right, that whole 10/90 split. If I want to put 100K in, and if I can go back in time, if I'm that consumer and I know, wait a minute, I can put 100K and only have 10,000 go towards that premium. Maybe I only commit to that and add the rest at my leisure to free up more cash flow, to build in more flexibility. You can do that kind of stuff, which is attractive. It helps me learn how I can use a life insurance policy as a flexible savings asset rather than a rigid bill. So why many have a bad reputation? It could be a number of reasons, right? Poor performance or poor design. One's trying to upsell a high base premium. A lot of times that's the case. But to prevent that from happening, to make sure I as a consumer don't get caught up in a situation where I say, wait a minute, I wish I would have known that and then I could have done something differently back then, I want to be educated on the policy design, really. How do I maximize the monetary value of a cash value life insurance policy, or be aware of how to do so? Because if I can continue to maximize that life insurance policy, cash value and death benefit, that's going to grow nicely as time passes as well. If I can do that, everything else becomes easier. Practicing the concept, IBC, I can borrow and repay. I've got more money in cash value to practice that concept. If I want to pull income from the policy down the road via retirement income stream, I've got more money in the policy, short-term and long-term, where now I can do that. So really, policy design and looking at quality companies will make sure I'm in a position where I don't have buyer's remorse down the road, and then that company and agent I worked with hopefully does not have a bad reputation. Hope this helps.